Hello, traders. It's 8:01 a.m. Chicago time on Monday, the 16th of September, 2019. This is episode number 1596. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off sentiment across the board. The overnight high is actually well below the low of Friday and well below the balance between Friday and the day before. Friday was an inside day in the ES. Allocation is to safety assets, gold popping a little bit higher, $10.70, trading at 1,510. The bonds are slightly up, or actually quite a bit up. One handle 32 ticks currently. The 10-year note is up 12 big ticks. The Japanese yen's up. The Eurobund is up. The dollar index is up. Yields have fallen slightly. The laggard this morning is the Euro stocks, followed by the DAX, the NASDAQ, and then the Russell. Crude oil is leading the pack. In case you were not aware, because you had just an incredible weekend, never looked at your phone or anything, crude oil is popped up about Brent popped up about 17% on the open yesterday. Um, this is mainly due to an attack on a major oil facility owned by Aramco in Saudi Arabia. This oil facility this attack knocked out about half of Saudi Arabia's supply, which comes out to about 5% of the global supply. And prices are responding due to a cut in supplies. And because of the added risk, investors are responding in a protective way, as we would expect. You'll have to excuse me this morning. I had actually started losing my voice on Friday and have kind of been recovering all weekend. I'm still not 100%. But that's where we stand. The theme today to pay attention to in terms of uh, the news, even though a U.S. president said that because of the attack, he has authorized release of oil from the strategic petroleum reserve, that did have a dampening effect on crude oil prices. The crude dropped at night, and it's really been trading sideways around $60. Friday, if you don't recall or you don't know, Friday closed at 54.82 on a WTI, and it's currently trading at $60.54. So about $6 higher. So that's where we are today. Crude is up 10%. There are quite a few numbers came out of China overnight, nothing really major. And looking at the calendar for today, there really isn't anything major there either. Tomorrow, however, we do get the German zoo economic sentiment figure. That's very important for Germany. Comes out at 5 Eastern. And then we have a few low tier numbers for the U.S., but we do have the Japan balance of trade. Wednesday we have the inflation rate out of Great Britain, in Canada. Wednesday we have the Fed rate decision. So that comes out at 2 p.m. on Wednesday. Pay attention there. There's likely to be a potential surprise given the news here, the added risk, geopolitical global risk, based on this oil issue. Thursday we get BOE out of Great Britain as a key release. We have some U.S. releases, lower tier, inflation rate in Japan, and the loan prime rate out of China. And on Friday, to wrap up the week, the main release there is consumer confidence out of the Eurozone. That's what's scheduled. Now, we all know that there's a whole lot to um, the news than what's scheduled. A lot of surprises. Here's what was expected on Friday. The primary scenario on Friday is that we are likely to test up impulse down, hold this 3011 area, and likely to drift up into new all-time highs. The all-time highs are 30, 31.50 on the December contract. Remember, the volume today actually is greater in the December than in the September contract. You should be trading ESZ or NQZ 19 or 9. You should not be trading the September contract. The pace of the roll shows that it's well on its way. It's in line, and it's likely to be done by Wednesday. The roll is likely to be done by Wednesday, even though this Friday is quad witching Friday. Not the best day to trade, in my opinion, historically and statistically, at least for me, and many of the traders that I've backed. It's a day full of kind of um, surprise moves and things like that. So the primary scenario is looking for a dip, find the buyers, and then push into new all-time highs. What actually ended up working out is scenario two partially, and that is to push up, find sellers, come back down towards 3011, right in here, bounce a little bit, bounce around a little bit, and then start to push lower and potentially take out this double-ish bottom or weak low from the day before. Here's what actually happened in contrast. So we open up, we are pretty much sideways throughout the morning. We end up squeezing higher right to that value high area, and then we end up drifting down into that 3011 here. You notice the IB low is 3011, and then we push a little bit lower, hold the mid, and close outside of the IB on what is a neutral day down, neutral close down. This action tells us two things. One, we are inside of the prior day's range, which is up here. This is the prior day's high and low. We are inside of the prior day's range. So we have a consolidation day and we had neutral close down. This sets us up for a potential of a drift downwards on the reopen. Had this news not occurred on its own, the S&P was set up this morning technically set up this morning to continue its drift down. It is trading down here at 29.9775 below the century figure, and the overnight low is well below that at 29.8350, right on our stock zone there. So if we look at the overnight session, so that's Friday, neutral, close down. Um, as we look at the overnight session, we have a gap. We have a very weak responsive play on the gap overnight. We've been mainly sideways. We have almost a P-shaped profile here. It is really, we're seeing a very weak high, in my opinion. This is likely to continue to drift up. We are above mid, which is this blue line right here. We are above VWAP. The point of control is at the upper end of the range with a weak high. High probability of the market drifting back up and being responsive, pushing into at least 3006 or so before we start hitting the areas above. The overnight, despite the rollover, the overnight volume is relatively strong. I'm expecting a little bit of volatility on the open, given the gap zone down. And just to put things in perspective, the template day, the template day is last Wednesday, the good, the strong buying day, rally day, and we are likely to respond back up. But seeing as how this day played out, there's not much to play off of because this was a price discovery day. There was no balance, no consensus on this particular day. So that's how things are shaping up in terms of context. Let's take a look at what we're expecting for today. So let's set this baby up. All right, so what are we expecting for today? And I'll show you the bookmap screen here in a minute. In fact, let's go to bookmap first. Let's look at how this thing is traded. So this is crude oil full depth. Um, Crude oil full depth, and what we have here is you can see that before the market even opened, which is right up in here, you can see that bids and offers in the pre-market, in the pre-open positioning, the orders in the pre-open actually determine where the opening price is likely to be. You could see there's quite a bid here that's just following up. You can see these dark areas, pushing up, pushing up, pushing up until we found the opposing offer, and that's where we opened. And we open and we become responsive right away. The area I'd like you to pay attention to today is this 59 area, and then up here it's 60 and a quarter or so, 60.2. If you look at the 60.2, we come right back to it. This is crude oil, by the way. 60.2, we come right back to it. We bounce up, hold sideways, offers come in. The market runs away from these offers and collides again with that 60.2 area. After a while, after eating up all those bids, it starts to trade lower. And what does it do? It comes back and it collides with that 60.2. If you have watched the videos I've done in the past about order flow, collisions, and all that stuff in Bookmap, you know how these collisions work. Generally, the market comes in and collides with volume, creates a big dot, and it either bounces or it breaks through. In both cases, it is likely to come back to that collision spot. It is likely to come back to that collision spot before it continues. There's usually a trade in there somewhere. So anyway, we come back to the 60.22 and then we migrate down to the 59. The bid on the 59 has been sitting in the book for a bit. Consolidate at the 59. Come back up to the 60.22 again. Pull back to the 59 again, and then up to the 60.2 again. And guess where we're trading currently? 60.2. That's right, you guessed it. So it's this area here is just, pardon the term, is just a bitch right now for crude. And we have some really good longer term liquidity above at 61. It is really it's really jammed up in here, I think, as far as crude is concerned. You could see the size stacked down here at 59 and 58.75 or so. So you can see these peaks right here. These are likely to trade out, in my opinion. This is likely to trade out. And based on the map over time, we can see how long these bids or offers been here. Since we have full depth, we can see what's in the book over the time horizon. Okay, very interesting stuff. Let's take a look for a moment at the ES since the open. This is the ES since the open. Remember, we're quoting and trading December. The ES was pretty muted. I mean, it sold off. It sold off a fair amount at 7 o'clock or so last night central, and it's come into this big congestion area, and it's been stuck here with size on both sides, kind of just sitting around. It looks like 3005 is well offered, and that's the target that I told you about, 3005, 3006 on responsive buying. And with the profile being set up the way that it is, if you look at the profile here on the side, the profile being set up the way it is, the point of control being where it is, VWAP being where it is, and the mid being where it is more likely to drift up through this millennial figure and push into 3005 than not. But here's the thing, if the ES does not push through 3000 and get to 3005 and it sells off on the open, we have initiative selling, and that creates an even better opportunity. So I'm not attached to the market doing whatever. I'm more interested in what it wants to do, and if it's not able to become responsive and try to push back up into the prior day's range, then the move down is likely to be pretty strong, mainly because we're moving away from 2 days of balance up here. These are 2 days of balance, but this profile here has very little to hold things back. I mean, it just ran right through these prices the last time we were here. So what are we expecting this morning? This morning, oh, that's the wrong color. This morning, expecting an open auction against this point of control, expecting an open auction, and I'm looking for a response. The most expected, the most likely um, action is a response that pushes us back to 3004, 3005, 3006. I'm looking for it to poke into the prior day's range before it rolls over and starts moving back down. I really am the impact of higher crude oil prices is like a tax. This is like a tax that we owe to oil producing countries. This is what is likely to happen. It doesn't matter that the strategic oil reserves are being, petroleum reserves are being tapped by this administration. As long as price is higher and businesses have to pay a higher price, it is essentially like inflation or a tax on the cost of doing business, and the S&P is likely to reflect that. So I'm expecting it to test higher and then start extending lower. That's what I'm looking for on scenario one. Scenario two, if we do get an immediate response, we might see a poke above the overnight high before we get an impulse down, and then we are likely to push down into this 29.85, 84 area before we see a bounce and some rest. In either case, I'm expecting wider than normal range and some more volatility, higher volatility today because the market is very, very likely to continue to react to this news. This is uh, the biggest loss of oil production ever. We have never seen the world lose about 5.5 or 5.7 million barrels per day overnight. It's likely to there is no precedence for these higher time frame traders or funds to work off of. They're like, and because there's an elevated amount of risk, the natural thing to do to stay in business and to protect customer funds is to reduce exposure. Now, the third scenario, because it's news based, the third scenario is also valid, which is to open, sell off a little bit, and then we have an open test drive higher that lingers here at 3005, 3006, and then starts to move back into the range. I expect in that case that it's likely to really get tangled up here at 11, 12 before it gets a break. But I'm not expecting the responsive higher, the buying spree to be all that strong because at the end of the day, we still have a higher cost of energy. And we'll see how that plays out, but these are the likely scenarios. So let's not walk away with lines on a chart that make it seem like we're predicting the market. The key areas are 3005, the overnight high coupled with 3000, the millennial figure. This is another key area. The next key area is 2992, 2994, which happened to be the overnight low. And then beneath there, 2977.50. If we get above, we have 3011 and 12. These are the key reaction areas. These are the areas I'm expecting the market to either push against, flutter before it goes through, or push against, flutter a little bit before it comes off. I'm expecting some sort of a reaction in these areas, and that's why I'm drawing these lines the way they are. So if you don't want to follow the pattern, the idea behind drawing the pattern is once I'm in a trade, I want to hang in there for the next big area as it breaks through. Okay. Good luck, everyone. Hopefully, you'll be patient enough today to pick your spots. and let the market unfold. I would definitely wait out the first 15 minutes and then see what happens from there. Good luck.